Greetings everyone in this fine hour. So now we will continue my previous thread regards dividend stocks because, well, I personally believe for passive and conservative investors this approach makes sense, as I have noted in my previous video. And now let's go a bit further and let's surf on the internet, as they did say in the older days, and let's explore what we could see from public screeners and publicly available information. So what I just did, I just went into Google and searched for stocks with highest dividends, and I had some websites which offered just that. So I just randomly went to dividend.watch, nerdwallet.com, and simply safedividends.com. So here what I will do, I will open these lists and let's just explore a couple of these companies. Well, whatever we will have them, I don't believe here we have something for now. Okay, we had those high dividend stocks which I had previously. I think I made similar screenshots in the previous video of high dividend stocks, but I actually never explored them. So let's get down to that and see how company with 9.82 dividend yield looks like. So it's Ares Capital and it's asset management industry, and safety index is sort of borderline safe, whatever that means, but let's just look at and explore them. It will take a couple of minutes and we will see just what are general looks of these companies. One is mortgage REITs, yes, and second is asset management company. So it kind of makes sense they are making that kind of payments because, yes, this is asset management company. They make money on fees, so basically they are redistributing their fees as their dividends. So nothing interesting there. Let's see here, how does the financials look. So no, this is Arbor Realty, so it's real estate trust. This is this company. This is the company which provides every kind of financial services. Actually, I don't know nothing about this company, so I wouldn't certainly look for weeks at their financials if I wanted to look only for dividends. I have to see patterns because we could never know everything, but we have to base on probabilities. So with that said, let's get into their financials and see. Revenue is actually, it has been on year basis been stable. Net income as well. So for dividend stocks, we are not going for higher performing companies here. We are looking for companies which are stable, so they are able to pay dividends. That's the idea. So here we have to see what are the profit margins, what are the revenue and net cash flows in that sort of things. So we would see that I cannot see, for example, but here you could see that, yes, net changes in cash is sort of fluctuated quite a bit. I don't know why that is, but this is one interesting thing. For dividend stocks, I doubt that I would want to have these sort of changes in cash. Now obviously this is some sort of financing here, so this means that they are getting the cash somewhere, but whether I want to do that for my dividend companies, well, I'm not sure. So this is one red flag for me. The fluctuations in changing cash are too high. And what about net income? Well, net income is relatively stable, which is good, but also it could be easily manipulated, so nothing interesting there. And profit margins are stable, so kind of mixed bag from what I'm seeing here now. So, and this is the share price. It's relatively stable. Let's see whether don't want to go too wide for this. Yes, and stock price is stable. It was from $14 to $4 because it's real estate trust, obviously. And then it went from 14 to like $4 to $20. Now this is a nice thing. So real estate, yes, everyone thought that commercial real estate was crashing, and probably that somehow reflected to this industry, and then it made like almost five-fold increase. And this is what I'm talking about, the baddest industries at the baddest times. They actually could make one of the best investments in general. But here, yes, here we had quite a good run, and I would say there is nothing much to say about this company overall. Or should it is considered as a safe dividend paying company? Well, for what I would tell you now, no. I would say that if it has risen, it has made net annual report, and this time this is not a good investment. Like, despite the fact that it's stable, despite the fact that everything, but it's not worth our time, because I believe we could make something better. So extremely good dividend yield itself in this time, it's a red flag here. No. So let's look at Ares Capital. And it's Ares Capital stock. This is maximum stock price. Now this is more interesting. For dividend paying company, this is actually pretty good. You know, it has to be stable and boring, and it has to pay dividends. So stock price kind of reflects the company's idea. Ares Capital, excuse me, not Ares. Okay, this is good, and let's see. Let's go at financials. Where the hell we have those financials? Oh, we have income statement here. So are there red flags here? Total revenue 850 fluctuates, but this was times of COVID, so I don't know how to perceive them. It kind of distorted everything we had. So where we have net income, common shareholders. Okay, it's suspiciously stable. I don't know why, but it looks like that. It kind of reflects stock price as well. So earnings per share are stable, and we have taken into consideration COVID here, but net income from continued upward, then my god, it's stable. Why it's so? I don't know. Let's see further. But then common stock equity, invested capital, it kinda is, the debt is not that, it's growing like proportionately if you look at proportional assets. So I have to go here deeper, but for now operating cash flow is in the minus. That's not a good thing. They're issuing stock. So here the thing is a bit mixed, but what are my short conclusions for this 10-minute video? If we take random list of dividends and look at highest dividend yield, as themselves they only indicate that company might be interesting to look at. For instance, Able Realty Trust doesn't made me that of the fan, because, well, we had to go deeper for financials, and stock price didn't reflect the performance. If it's started to quote at 2006 or 7 and now it's in the red, it's not a good investment, so forget about it as a dividend paying stock. But Ares Capital, it was impressively stable, so we don't need like high roller here, which could make our 10 times our money. We'd have to make stable company with stable dividends, and it looks, this is the company with which we could shortlist to assess further. This would be taken out. So what we could do, we could just look at 10 companies, couple of them we will cross out, couple of them we will shortlist, and then out of the shortlisting companies we will make a portfolio. This is how it works, and I showed you a glimpse in this industry. So make sure you're following me. More videos regarding dividend stocks to come. So bye.